Hello, everybody. Good day and welcome to Mastermind number 74. Today is March 30th, 2024, and my name is Hanif Brown. And so today on our agenda for our Rich Dad Poor Dad webinar, we have a bit about, we're at chapter 7, getting started. And that's in terms of Rich Dad Poor Dad. For real estate education, we're talking about who exactly is a private lender and what is private lending. For news, top stories in Canadian real estate, a lot more insolvencies going on, different news with regards to unemployment and more, and rates. From a cryptocurrency standpoint, Bitcoin is now at an all-time high. All right, to mark the date, March 30th, 2023. And we're going to be going over your profit and loss statement and your cryptocurrency taxes. So it's tax season. And so you pay the taxes on what it is that you have made, whatever taxable events that have been triggered. As a disclaimer, I'm not a licensed financial advisor. You should not construe any such information or other material as legal, tax, investment, financial, or other advice. Nothing discussed constitutes a solicitation, recommendation, endorsement, or offer to buy or sell any securities or other financial instruments in this or in any other jurisdiction in which such solicitation or offer would be unlawful under the securities laws of such jurisdiction. I'm not a licensed financial advisor. Consult your licensed professional before making any decision. There are risks associated with this world of investing. And so, how exactly do we start meeting? This was based on Think and Grow Rich and what exactly is a mastermind group. So, this is more the webinar component of that, and we have our own mastermind group. Now, you'll see this book is written by Napoleon Hill, him having studied Andrew Carnegie back in the late 1980, late 80s, late 1800s, early 1900s. And, there's a whole story with how the book was published, talks about the power of having a mastermind group. And so we went through Think and Grow Rich. Now we're going through Rich Dad, Poor Dad, that book written by Mr. Robert Kiyosaki. So we've been going through, and so far, let's see where it is that we are. We're coming close to the end of this book, actually. And so we are now we went over how the rich do not work for money, why teach financial literacy, minding your own business, the history of taxes, and the power of corporations, how the rich invent money, working to learn, not working for money, overcoming obstacles, and now we're at the point of getting started. So what exactly does that look like when we talk about getting started? So let's jump right there and we will jump right into it and continue. I think we already started this chapter. Yeah, we did. So we were at, we already did part one in terms of getting started, which is finding a reason greater than reality, the power of spirit. Most people aren't really doing, whatever they're doing for the money. It's more what the money can do. Maybe you want to care for your loved ones, you want to travel, maybe you want to feed your addiction, whatever it is that may be. I don't know, whatever it is that it may be for you. For me, that addiction is chocolate and football, kind of. So, part two talks about making daily choices and the power of choice. Choice being that main reason people want to live in a free country. So, we're gonna go over this today. Did we go over this already? Let's see. Da 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 da. Okay, here we go. So we'll go over making daily choices. The choice is the main reason people want to live in a free country. We want the power to choose. Financially, with every dollar we get in our hands, we hold the power to choose our future, to be rich, poor, or middle class. Our spending habits reflect who we are. Poor people simply have poor spending habits. The benefit I had as a boy was that I loved playing Monopoly constantly. Nobody told me Monopoly was only for kids, so I just kept playing the game as an adult. I also had a rich dad who pointed out to me the difference between an asset and a liability. So a long time ago, as a little boy, I chose to be rich. And I knew that all I had to do was learn to acquire assets, real assets. My best friend Mike had an asset column handed to him, but he still had to choose to learn to keep it. Many rich families lose their assets in the next generation simply because there was no one trained to be a good steward over their assets. And now, having reading this, I think we went over this in Mastermind number 73. So we're actually at number 3. So let me continue there. Number three talks about choosing friends carefully and the power of association. First of all, I do not choose my friends by their financial statements. I have friends who have actually taken a vow of poverty, as well as friends who earn millions every year. The point is that I learn from all of them. Now, I'll admit that there are people who I've actually sought out because they had money, but I was not after their money. I was seeking their knowledge. In some cases, these people who had money have become dear friends. I've noticed that my friends with money talk about money. They don't do it to brag, they're interested in the subject. So I learn from them, and they learn from me. My friends who are in dire financial straits do not like talking about money, business, or investing. They often think it rude or unintellectual. So I also learn from my friends who struggle financially. I find out what not to do. I have several friends who have generated over $1 billion in their short lifetimes. The three, the three of them report the same phenomenon. Their friends who have no money have never come to them to ask them how they did it. But they do come asking for one or two of two things or both, a loan or a job. And as a warning, do not listen to poor or frightened people. I have such friends, and while I love them dearly, they are the chicken littles of life. To them, when it comes to money, especially investments, it's always the sky is falling, the sky is falling. They can always tell you why something won't work. The problem is that people listen to them, but people who blindly accept doom and gloom information are also chicken littles. As that old saying goes, birds of a feather flock together. If you watch business channels on TV, they often have a panel of so called experts. One expert will say the market is going to crash, and the other will say it's going to boom. If you're smart, you listen to both. Keep your mind open because both have valid points. Unfortunately, most poor people listen to Chicken Little. I've had many close friends try to talk me out of a deal or an investment. Not long ago, a friend told me he was excited because he found a 6% certificate of deposit. I told him I earned 16% from the state government. The next day, he sent me an article about why my investment was dangerous. I've received 16% for years now, and he still receives 6%. I would say that one of the hardest things about wealth building is to be true to yourself and to be willing to not go along with the crowd. This is because in the market, it's usually the crowd that shows up late that's slaughtered. For example, actually, let me continue. If a great deal is on the front page, it's too late in most instances. Look for a new deal. As we used to say as surfers, there isn't always another wave. People who hurry and catch a wave late usually are the ones who wipe out. I'll give an example. Bitcoin is at an all-time high. Everybody's talking about it. Everybody's talking about it. But here what? When you go ahead and you go ahead and acquire here, then a couple of months ago they're like, oh man, yeah, crypto this, crypto that. It's not gonna work out. Well, that's because you kind of bought at the height of the market, right? So similar thing with properties and more. And so smart investors don't time the markets. If they miss a wave, they search for the next one and get themselves in position. This is hard for most investors because buying what is not popular is frightening. Timid investors are like sheep going along with the crowd, or their greed gets them in gets them in when wise investors have already taken their profits and moved on. Wise investors buy an investment when it's not popular. For example, when the crypto market was not hot, people were like, nope, I'm not buying. They know their profits are made when they buy, not when they sell. They wait patiently. As I said, they do not time the market. Just like a surfer, they get in position for the next big swell. It's all insider trading. There are forms of insider trading that are illegal, and there are forms of insider trading that are legal. But either way, it's insider trading. The only distinction is how far away from the inside are you? The reason you want to have rich friends is because that's where the money is made. It's made on information. You want to hear about the next boom, get in, and get out before the next bust. I'm not saying do it illegally, but the sooner you know, the better your chances are for profits with minimal risk. That's what friends are for. And that is financial intelligence. And then we have part two there after that. So we've concluded what they're talking about here for number three. And what's he saying here? Choose friends carefully and the power of association, right? So in it, he goes over different situations. First of all, he doesn't choose his friends based on their financial statements. I have friends who've actually taken a vow of poverty, as well as friends who earn millions every year. So do you actually need to go ahead and just have only wealthy friends? No, you don't. You have different interests, and money is not your only interest. The point is that you learn from all of them. You learn from everyone. So both the people with a lot of money and people who don't have a lot of money, right? It's not exactly maybe well, to each their own, right? But that's what it is that he's saying there. You'll have different interests as a human being, I like sports. I'm not gonna be friends with somebody just because it is that, well, they play football. I love football, but they don't have a lot of money. Does that mean I'm not gonna be friends with them? Absolutely not. Football is a completely separate interest and a beautiful game that has nothing to do with money. That sounded so passionate. Anyway, no, I'll admit that there are people he's actually sought out because they had money, right? But he wasn't after their money. He was seeking their knowledge. People who've got acquired a lot of money, a lot of assets under management, that's for a reason. They had a way in terms of how it is that they got there, right? And so you seek them out because of their knowledge. You want to know how they got there. You're not asking them for money. You don't want to be the person who's asking them for a loan, right? Or a favor. You want to learn from them, right? And oftentimes you'll find that they really like that, and they're a lot of the times people like that are very generous with sharing how it is that they got to where it is that they are now. So he learns from them and they learn from him. Then Kiyosaki went on to talk about his own situations, right? In terms of when he was looking at the certificate deposit, how he earned 16% per year from the government. And this guy was like, well, I earned 6%. Look at the attitude shift in terms of how he approached it. He actually learned what exactly the guy was doing. This guy was closed off in terms of information, and he kept on earning 6% for the year. It doesn't hurt to learn things. And after you learn something, then you can make an informed decision, as there are multiple opinions that are out there. That's why it is that it's subjective, and you can make informed decision in certain situations. So he's saying that one of the hardest things about wealth building is to be true to yourself and to be willing to not go along with the crowd. Do not go along with the crowd. Don't buy in when everybody else is trying to buy into, crypto at Bitcoin at an all-time high. The time it is that, for example, I'm just using that as an example, right? So, many different situations we could use here, many different sayings. People will say, you're the average of the five people you spend the most time with, right? You want to be closer to the center. Another one is when everybody else is afraid, you go ahead and you be brave, right? That's not exactly how it goes, but I know the idea of it. Anyway, that's not the main point. We're talking about the power of association here. So you want to associate with people who have what it is that you are looking for, whatever that may be in terms of results, and it will cut your learning curve in terms of getting to where it is that you would like to be. There have been many times when it is that I've had to purposely seek out people just because of the results it is that they had in a specific area of life, and it worked out great, because they've already trodden that path. You talk to them, learn what it is that you can, and it works out great. So that's that for then. Next week we will continue with Rich Dad Poor Dad, and we are continuing same chapter. That's how we're on to part 4. Master a formula and then learn a new one. The power of learning quickly. Master a formula and the power of learning quickly. Then learn a new one. The power of learning quickly. So we're on to our next part now, which is talking about real estate and cryptocurrency. So we're gonna go over a bit of education as well as market updates. So we're talking about private lending when it comes on to real estate. And I brought up this article And again, people, I always use some basic stuff in terms of talking about these definitions because the information is readily available. You just need to go ahead and seek it, right? So we're at the letter P. So we're talking about private lending, a lot of stuff we could have gone over: promissory notes, property taxes, and a lot more. So when it comes to real estate investment strategy, there are many opportunities to receive funding for a project. Two of the most common sources for investment property financing are private lenders and traditional bank loans. Somebody may be saying, private lenders? I thought you could only, get this stuff from the bank, also known as a mortgage. Before choosing which type of real estate lending works best for your project, it's important to understand the differences between a private lender and a bank mortgage. So there may be a situation where it is that one is better off than the other for you, depending on your own situation. While each provides money, a smart real estate investor should know the differences between the two. Banks are traditionally less expensive, but they're harder to work with and more difficult to get a loan approved with. Private lenders tend to be more flexible and responsive, but they're also more expensive. So you're paying for that flexibility, that responsiveness, and maybe the ease of qualification. So you're paying a little bit higher. So they talk about what exactly is a bank lender and what is a private lender. So I'll go over what is a private lender. Private lenders are generally funded by investors or by banks or both. So you could be a private lender, right? People have mortgages. Well, you could be that person that gives the money for different mortgages, and you're getting a certain return on that money as it is that there's interest accruing on it. You don't have just have to be the bank alone making money. Private lenders are in the business of taking funds from private investors and making private business purpose loans with those funds. The investors expect a decent return from their investments. An interest rate from money borrowed from banks is significantly higher than the banks are being charged for the funds. These factors raise the private lender's expenses, which is then passed on to the ultimate borrower. Then it talks about the private lender versus the bank mortgage comparison. And it goes on to be, I'll talk about this. So pros and cons in terms of a table. Private lenders, you'll find they're higher interest rates, more expensive, but they're faster, right? Uh, I'll compare apples to apples. Private lenders, you'll find they have higher interest rates and they're more expensive. However, banks have lower interest rates and they're less expensive. So they're talking about how, the fees there, uh, rather the rates. Private lenders, you'll typically get a response faster. Banks are a bit slower. Then, in terms of the approval process, for private lenders, it's a bit easier. For the banks, you're way more scrutinized in terms of the approval process. They include your financial history and your credit audit. In terms of a regulation standpoint, private lenders are less regulated. And there's a lot more flexibility. With banks, they're subject to significant government regulations, so there's less flexibility. For private lenders, there are more customizable loan options. And then with the banks, you're seeing where it is that you have strict loan options due to regulation. So there are a lot of different private lenders out there. I'm pretty sure you know somebody who's maybe within two networks of you that is a private lender. So if you're looking for, it's good to explore your options above all else before it is that you make a decision, how something could work out better in a certain situation there for you. So, or maybe you want to become a private lender. You have a certain amount of money. I know many people who do that, and they're looking at loaning out their money to trusted people who know exactly what to do with it so that they can trust that they can get a return. And it's money making money. And so that's that for private lending. If you are a private lender, feel free to reach out. We're always open to looking at different things. And it's always good to have private lenders. You just never know, especially these days with regards to financing. So now we're talking about news a bit. This week's top stories. Today is Wednesday now, so there are a couple stories this week that I haven't gone over. So this is actually from Monday. Look at this. This picture is so funny. Hello. So, Canadian mortgage delinquencies and business insolvencies surge. Tears. when is this stuff really gonna stop? You know, it's bad news all around. Bad news all around. Ontario Premier's company quietly sold a $6.75 million property flipped months later. So as a company associated with Ontario's Premier quietly sold a pricey piece of land. The industrial property in West Toronto went for 6.75 million, a premium compared to comps. Okay, interesting. The buyer didn't lose out though, since it was transferred at a much higher value just a few short months later. Since the initial sale, the property's value has significantly outpaced the market. Well, you're a politician, so that stuff gets scrutinized a bit, but it seems like things worked out to be a good deal for those involved. Canadian economy in modest excess supply. Higher rates need time. That's Bank of Canada saying. The Bank of Canada thinks monetary policy is fine at the current level, but needs some more time. Central Bank warns inflation remains too high for its comfort, but it's also seeing progress. With excess supply of everything from goods to labor, their view is the only thing needed is time. So give things time. So they're saying, you know, we're seeing certain things that we want to, but there's also an excess supply of everything. Okay. Canadian business insolvencies soar to highest level in nearly 20 years. 20 years. That's a wow. Canadian business insolvencies are making up time for the lull seen since 2020. Monthly insolvency filings for January hit the highest level in nearly 2 decades. 2 decades. What? The sudden surge comes as the end of pandemic supports meet higher interest rates, along with a higher input cost and weaker consumer. A perfect recipe to kill small biz. So this is the combination they're saying here. It's the highest it's been in 20 years. That's whole 2 decades. So the sudden surge comes as the end of pandemic supports. So those are those CEBA loans and government supports that were put out from at the beginning of the pandemic. So they were propped up on all of this support and may not have been doing so well. And now it's time to renew different rates. Or you're maybe getting loans and they're just not working out because of the higher rates. And now, along with higher input costs, cost of materials and more have gone up. Inflation has gone up, and a weaker consumer. People don't have money to spend, so they end up spending less. So, with that being in mind, it's the perfect recipe to kill a small business. And so, if you're a small business owner, you're wondering, what's happening. There are greater macroeconomic factors that are at play here. Canadian mortgage delinquencies surge up 135% in Ontario. What? 135%. Wow. That's a really big number. That is a really big number. Wow. That's not good. Canadian home building intentions are worse than 2019 despite government stimulus. So home building intentions, they're worse than 2019 despite government stimulus. Well, January saw just a small increase when it comes to residential permit application values. When adjusted for inflation, the paltry amount looks even worse, lower in real terms than developers had been planning back in 2019. Government stimulus is forcing non-market conditions, ironically, doing the opposite of their goal. So people aren't building houses. Bank of Canada to delay rate cut talks as economy surprises. So in summary, we're seeing a lot of different stuff. Like this thing is so funny. It's funny, but it's actually not funny. People are losing money, businesses are closing, people are defaulting on mortgages, people don't have money to spend, and that's not good. That's not good. That's not good at all. That makes things not so fun for a lot of people, and it's very unfortunate that that is the case. But hey, we have to toughen up and do what it is that we need to do. Otherwise, you end up complaining all the time, about the bank this, the bank that. What are we really gonna do? Well, focus on your own situation, get a better relationship with money, increase your streams of income, and whatever that may look like for you. Cut back on expenses, whatever that is. So that's not for real estate here today. So we're seeing different things. A significant piece of land sold by Ontario's premier, then flipped a couple months later. Canadian economy, modest excess supply, higher rates need time. So they're saying, there's an excess supply of labor, goods, and we just need to give things a bit of time. Uh, Business insolvencies at a 20-year high. Mortgage delinquencies up triple digits, not even double digits, triple digits in Ontario. Um, People aren't building houses. All right, Bank of Canada to delay rate cuts as economy surprises. Here we go. So, not good things we're seeing there at all. And so I'm gonna pause there for now because this is also very negative, sad news, you know. It's unfortunate, but it is what it is. And I'm gonna jump into our next thing now regarding the market that there's a little bit more positive stuff to say. And again, with these negative things in terms of the real estate news, it also is opportunity. This may be the end of an era for different businesses, for different maybe developers and people who don't want to continue doing what it is that they have been doing, and that opens up an opportunity for new ideas and new persons to come in and put some fresh blood into different things that are going on with regards to the Canadian economy. So let's see what's going on in this crazy market here of cryptocurrency. Let's see. So we're seeing where BTC is at an all-time high. Let's go back on this thing. Okay, here we go. So let's see what are we working with here? What are we working with here? So the market cap 2.76 trillion, up 2.94%. So $2.96 trillion. That's a market cap of cryptocurrency market. Of that amount of money, 52.2% is in Bitcoin and 17.4% is in Ethereum. Now let's look at the assets themselves. Bitcoin is now at $73,067. That's a new all-time high, whereas the previous all-time high was just at like $67,000 in what is this, November 2021. Whoops. Yeah, November 2021. That was the previous all-time high. And now, what is it, like 2, 3 years later, right? We're at a new all-time high. So when we went down to these levels, man, people who bought at these levels, they're making bank right now. They're making bank right now, and that is fantastic. That is all-time gain. So, the market is there, whether you believe in what it is or not. There's opportunity there to be made to make money, and this is the exact reason why not to go in exactly. Right now, I'm not giving anybody advice, but you can look at a basic chart and you can see it's at an all-time high. You'll probably have to wait some time in order to see if you're looking at making profit in this way. But those who bought down here is when it is that. And look, the patience that Kiyosaki was talking about, this was just like roughly under 2 years ago, a year and maybe a month ago or so. So now we're at 73,000. So that is it's good if you made profit, cash out. Don't try to well, do what you want. But if you made profit, be happy. And yeah, although the halving is coming up, so we could see some kind of different behavior. Maybe we even break a newer all-time high. Who knows? BNB is up 40% in the last 7 days. Ethereum, we had an upgrade on that today. What's that? Dencun or Decun upgrade is up 3% in the last 7 days. Again, this cryptocurrency is technology. There are always different updates that are going on. BNB is up 40% in the last 7 days, up 11%. in the last 24 hours. Let's see if we have any other big gainers over the past 7 days. Solana is up 22%. XRP is up 11.7%. And that was just Bitcoin we're talking about. There are many other coins that actually probably hitting newer all-time highs there as well. But this is kind of what a bull market is like. I'm not saying that we're in a bull market now. We're definitely very bullish. Well, I mean, it's fair to say that we are. Yeah, really. You'll see Bitcoin do like a 9%, and you'll see stuff like BNB and the smaller cap coins do, for example, a 61% like Ton coin, a 31% like AVAX, Layer 1 blockchain, Polygon doing a 16%, right? Uniswap is down 11%. Near Protocol is up 47%. And this is just the last 7 days, people. That's absolutely crazy. Injective is up 22%. And let's see, what's the biggest gainer that we have? We have 39% for the Graph Protocol, 98% for Thorchain, Rune Protocol, 98% over the last 7 days. That's absolutely crazy. 100%. Of course, it's a meme coin. Of course, it's Floki. Of course, it's Floki. So that's a meme coin. So typically, you'll see coins like Bitcoin do like, an 8, 9%. You'll see other small cap altcoins do, 20, 30, 40%. You'll see meme coins do even triple digits like you saw with Floki Inu a while ago. So that's kind of normal behavior in a bull market. A lot of it led by sentiment. Ronin is up 50%. Let's see. Shiba, okay. But Pancake Swap is up 46%. Let's see if we have any other triple digits. The fact I'm actually looking for another triple digit, that's crazy. Manta is up 20%. And yeah, IO's network, it's a newer one breaking into the top 200, is up 162%. Well, it must be. Having broken into this top 200 there just the past couple of weeks. Space ID up 107%. Some crazy stuff happening. That's the point, right? That's the point. Now, as it is that's the case, many people don't fully understand cryptocurrency and the taxes associated with them. Well, we'll talk a little bit about this profit and loss statement, where it's a financial document that gives that sums up the earnings, costs, and expenditures incurred during a specified period. So profit and loss statement is a financial report, also known as an income statement, operating statement, earnings statement, or statement of operations. The P&L statement shows the company's revenue and expenses, including gains and losses. It lets you see how much profit the company is making or losing, which can help you make investment and business decisions. So P&L statement will show you how much money your company is bringing in, revenue, how much it spends, cost, and what's left once you subtract cost from the revenue. So within cryptocurrency, it's a similar thing, right? You'll have the cost of the goods sold. You're talking about, well, why don't they make this specific to here? Actually, I'll just talk about it. So you'll have a statement, and you're probably wondering, how exactly do you generate this statement? Well, you could generate it yourself in terms of each of the exchanges that you may be using is able to provide one of these. So what you can use actually to make this simpler is a tax reporting software. For example, Coinly. This is one such Bitcoin tax calculator for Canada. So it connects to 750 different crypto platforms to track your transactions and calculate your Canadian crypto taxes fast. So you can actually connect it to whatever wallets or exchanges that you are using, and it will import your transactions, calculate your gains, so how much it is that you made, whether it is that it's realized gains or unrealized gains. Unrealized gains, for example, that you didn't sell, you know, your losses, and how much income it is that you made. You know, it'll generate a pre-filled schedule 3, and it's also integrated into TurboTax. Lots of different positive reviews there from users. And those are some of the exchanges. So Coinbase, Binance, um, Femex, Crypto.com, Bittrex, Cointree, and so many others, KuCoin and more that it connects with Gate.io and so much more. NFTs as well, calculates your crypto gains. And so uh, you can see an example of what this tax form here looks like. So this is a very helpful tool to use in terms of when you're sorting out your stuff for your cryptocurrency taxes, and it is tax season. So check out this tool in case that you're looking at doing so. And it's going to help you in terms of, we'll show you what that profit and loss statement is. With that being said, that is everything, people. I started a bit earlier today than planned. So that's fine. It is what it is. And so that's that. So we're looking at different things. We went over rich dad, poor dad. Pay attention to who you associate yourself with. Learn from everyone. Go after the people who have the results you're looking for. From a real estate standpoint, two different, you can have, lending, you have options. You have private lending, but you don't have only just that. You have also sorry, I should say it the other way really. You don't have only bank lending, you have private lending as well that you can go ahead and use. From a cryptocurrency standpoint, markets are at an Bitcoin itself is at an all-time high. And so with that being the case, great, 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 great. And profit and loss statement, check that out in terms of doing your taxes, and check out Coinly as an application that you can use in order to facilitate doing those taxes. So with that being said, I'm gonna stop there for now. Peace and love, everybody. Big up on yourself again. Um, Lastly, these are some companies that are utilizing blockchain technology. Bank and Finance, HSBC, exiting Canada actually, DHL in healthcare, Scotiabank for trades, and Bitcoin is now today at 73,151. With that being said, people, take care, walk good. If you're looking at investing, take your time. If you're looking for deals, send a message if you're looking to connect, and I will get back to you, or my team will, as soon as possible. So take care, walk good, peace and love, and bye-bye.